Good day. Ira Epstein of Linn Associates with your financial market wrap-up for the evening as we're now here on Thursday, the 18th of February, 2021, time 5:30. I hope you watched the Mars event. You know, they still can't show us the cameras on the ground to show us how the ship's landing, but what an achievement. They did get it down. It did everything they wanted to, and the first pictures came in like that. Wow, I can't wait to see what it's really going to be capable of. Should be very exciting. If you watch today in Capitol Hill, Robinhood, Citadel, and everything, it was really the chair of the committee versus the head man of Robinhood. And what did they accomplish? Absolutely nothing. A waste of everyone's time, in my opinion. Did they hit the matters? No. Do they understand these markets? They really don't. That's what I walked away from. And who doesn't understand them? The people asking the questions of these people that are in this business. They don't understand margin requirements to say, why didn't you have enough lines of capital? They did. For a normal time. You know, that wasn't normal. Something changed. They're called market shocks, but not political here. What we want to be is just understanding. They're looking into it, fine. But will anything come of it? If it does, it wasn't out of this meeting. That's how I walked away. I started off in the morning today telling people stock indices were looking heavy. They acted early on like there was a real problem in the market. And as it turned out, the one that I liked the best turned out to be the worst, which was the Russell. That is the market that is now out of its uptrend. The other markets are still in it at this point in time. Metals did get hit because the dollar index has got schizophrenia. Up 44 points yesterday, down 35 points today. What changed? Absolutely nothing. Is it trending? No. And you're getting these whipsaws in the different markets there. I'd be very cautious here on the energy markets. Yes, the weather is changing, and yes, electricity's coming back on in Texas and other areas that lost it. It's not just Texas. There's parts of Louisiana. There's many areas that have problems here. You've got to keep your eye on all those. I'd be watching them. Then if you're a grain trader, you want to be watching how this winter wheat is doing, because we could get what's called winter kill. That is something you've got to pay big attention to. The sustained cold that we've had is a problem. I just saw that today the forecast for Chicago, it's hard to believe we had nearly 18 and a half, 19 inches of snow through today. In the past since the 14th. And now we got 5 more inches coming in the city, they're saying, for the weekend. I hope not. I don't know where to put it. That's the big issue. Bonds and notes, a theme that is going on. You're getting the creeping increase in interest rates, and it's weighing on the stock market. Is it weighing on it enough to break it and get the market to finally get a correction, or is the market going to adjust to it and say, we know it, but the Fed has the markets back and we'll be able to absorb it? Big question, and it's probably the question of, right now, probably the question of the quarter that the market is dealing with. When we look at the S&P, you're basically down a half a percentage point for the week. Okay, the week's not over. That's with tonight's action being up. Remember that. We'll see what it does. It's certainly not damage on that chart. This is an interesting chart, what just happened. You now have, and I'm going to point this out and come back to it. I want to come back and get rid of today's action. You have an outside day down. So you have a high, another high, and you've broken down through the prior low. So when I come onto the chart, I'm going to have the swing line turning down, lower highs, and this low is under that. That's a change. The market has broken that uptrend. Okay. To capture the shorts, I have a rule. Doesn't mean it works, but this is my rule. If the market takes out 39.36 within 2 trading sessions of that high made, my rule is until the market gets back through the outside day's low, the odds are in favor, strong favor, that the market will make a move to challenge the closest moving average above it or a Bollinger Band, the closest of. So let's put the moving averages on the chart. Let's assume you don't take out 39.36. Well, if you keep drifting down, maybe you go to 38.59, right in that general area. If you take out 39.36, and that means you've taken out the high of an outside day down, I would look for the Bollinger Band, which could be 39.96, until that low is taken out. So, interesting. What about momentum? Well, there's the interesting part. It has not lost its embedded reading. Until that is lost, I say that the pros are buying these markets. When the embedded reading is at work, the chart pattern itself takes a back seat to this. There's a hierarchy in all this. Until that red line closes under 80, the trend is up. If it gets under 80, the odds favor price and the 18-day average will come together. Now, it's really a close, in my words, under 79, not 80, but 80 I've got on the chart there. It's too hard to put 79. In the NASDAQ, as you can see, the market is drifting and you're under the 80 level. Where did the market go today to find its support? So here is the market, a different chart pattern than we have in the others. This was yesterday. Today, the market reaches down for the support here. It already had a pattern of a higher high and a lower low. All it did is reach down for the support at that level. And tonight, the market is trying to figure out what to do with that. Let me put this right where you want it. That's what I wanted to show you right there. So I'll call the chart trade neutral right now. It's already hit its downside target. In the Dow, this is the stronger. It's got the embedded reading. It's just like the S&P, lower highs, lower lows. Take out this 31,632, and I think you're going to make a run to 31,979 unless you get back under 31,269. And on this chart, I'm not even in play for the 18-day average because you still have the fully embedded reading. The market that's the weakest is right here. First, you lost the embedded reading, as you can see, today with the reading of 74. Did we get it back right away when we reopened? No, actually it dropped more. So whether it hits that or not, it's time to call it a day. This is a trade that just didn't work out. I did think the market was going to hang in there. It still had the embedded reading. It didn't. Okay, it's got to regroup itself, and that's what happens. When we come to the VIX, one of the reasons I've been a bit friendly here is the VIX. The VIX has kept its bearish embedded rating. It's a contra-trend rally up to resistance. Actually, there's another moving average here that I showed my morning subscribers, and I think the pros were selling that to the 18-day average. That's what I think. I think they're out if you get the slow stochastic on a close over 21, let's say. Until that occurs, I'm still looking for more down. More down generally means higher stock market. Go up and prove me wrong here, then the stock market down more. That's the traditional way to look at the VIX relationship or risk to what the market's doing. In the bond market, this is a bear market rally and no more. You got an embedded reading. When you have an embedded reading, until it's lost, I say the pros are selling it short, looking for another challenge of the Bollinger Band. Trend is down, or is it? Well, you really have a pattern of a lower low, higher high. This is running the day. So keep that in the back of your mind, but it's a nice run on it. Everything moved to the right-hand side of the Bollinger Band. Told you yesterday that could happen. What's this market doing? Is it embedding? Well, let's look. We can't count Friday's action because we don't know where Friday's going to end. We had both numbers under 20 today on Thursday. Both were under 20 on Wednesday. They weren't that way on Tuesday. So if you're going to embed, you need to do it with a lower close and probably just like you're at now for Friday or lower. Be up from here, and you may not do that because you're flirting with an 1758 level. You probably, I would say the market can afford about 3-4 points, but not more than that. When I take a look at the dollar index, lower low, higher high. Do you see how the market's stuck at the 18-day average? I started talking about that with you yesterday as the market rejected the downtrend, didn't make it to the lower band. Now it's just a whipsaw market. I walk away from things like that until they straighten out. Why get involved? Eurocurrency is very similar. You have the higher high, then the lower low, and you're right back to the 18-day average. Momentum is not helping you. It's not calling anything on those charts. Bitcoin is still very bullish. It still has the embedded reading, and it's doing the ideal thing. It backed off to the right-hand side of the Bollinger Band, got away from being over it, getting support, and still lifting itself each and every time that you're getting a reasonable break, lose the embedded reading, then I'll make an argument maybe we're headed back to the 42,000 level. But right now, here you are near 52,000 and doing great. Since you got over this 18-day moving average of differences of Brent versus WTI, the Brent has been on fire. So what we're hearing now, and you're hearing more and more of it, is that the Saudis do want to increase production for April. Their meeting is on the 4th. It has gotten strength out of a lot of things to Brent, but a lot of Asia reopening, hopes there that China's going to start buying again. We'll see what happens, but their numbers have been down a bit. And on the Brent, you can see that we're starting to drop a little bit. The difference here, our weather pattern's probably going to break. It's just a matter of time until we get the oil flowing again, the refineries back open. It's not a permanent freeze. This is not the movie The Day After Tomorrow. I think it was with Dennis Quaid. Higher lows, higher highs. We'll see if you lose the embedded reading. If you do look for more of a correction. Hard to buy the market on this rally up here. You're flirting with losing it in the WTI. You're just above it at 82. The trend is up till it's lost. But this is a heck of a vertical price rally. Where would you put a stop on the trade? Heating oil. Still fully embedded. Going to be a lot of demand for that in the near term. This market's probably going to get stronger demand than the crude at this point in time. That's what they really need, and they'll take it out of storage. And look, you can't even stay up in nat gas. As I said, this market doesn't act like a market that's a true bull market. Admitted, you've got here, and you had a bullish crossover. I want you to take a look. When this gets over, that'll be the next day, Monday. Should be making new highs, and that's often what happens. It doesn't be a new high in the move, but a new high getting away from it. In other words, the chart coming up, it's exhausted that. So now with momentum turning down, if it's going to correct, that's the logical area it's going to make a return to, I think. We'll see. I want to remind you on our booklet on Guide to Technical Indicators, be it stochastics, moving averages, if you're a Gann follower, Elliott wave follower, all of them are there. And we've got 2 of these indicator books for you, each about 20 pages long, full of examples, explanation. How do you get it? Well, it's from our good friends at Modern Trader. You just simply go to our website under free offers. It's there. You can call us at this number. We'll be happy to put it in your hand. I'm Ira Epstein. You have a great day. And by the way, you should go to Modern Trader. It's a pretty good website to learn about things. I'm Ira. You have a good day.